Hi everyone, welcome to this afternoon's webinar. As I always say, it's afternoon for us here in the UK, and it's absolutely glorious. It's actually summer, which is fantastic. Sometimes in the UK we get four seasons in one day, but today is most definitely summer. It's great to have you join us today. Usually summer markets are quite quiet, but it's certainly not the case at the moment. So there's an awful lot going on. There's an awful lot to come, certainly at the end of today's trading session and tomorrow as well. So goodness, sometimes when you have days like this, it's difficult to know where to start, but I know where I'm going to start, and that is with the disclaimer that I know you can see on your screen. And if you could take a minute just to quickly look through it. David's distracted me for a minute. As you know, in all seriousness, trading can be a very risky business. So please don't ever think of using money that you cannot afford to lose. Right, very quickly. I've had a quick look down the those of you who are with us today, and I know we've got some of our quantum users, those of you who've just bought the indicators. I know I can see some of our Forex students, and I can see names that I don't recognize. So maybe this is your first time that you've taken the time out to come and join us. So you're very welcome. If it is your first time, what we're going to be looking at, that's myself, Anna, and David, who's sitting behind me, and that's my husband. We're going to be looking at the charts and the markets, and the session is called day trading, intraday trading. In other words, looking for trading opportunities. Primarily in this session, we do look at the US markets, the indices, we look at commodities, and I also look at the Forex market for, as I said, trading opportunities. But we look at the charts through the prism of volume price analysis, and that is looking at price action and volume to see whether the price action that we're seeing is basically genuine or not. And that's really what it all boils down to. What, as traders, all we want to know is, what are we looking at? Is it genuine? As most of the time it isn't, because the markets are very manipulated. But if you understand this relationships, the relationship between the price action, and by volume I mean activity, participation, call it what you will, you will soon be able to recognize those signals that VPA give on the chart, and not just in one time frame, but in all time frames and across the markets. You'll begin to recognize these very powerful signals that alert you to the fact that something is likely to be happening next, and it's usually completely contra to what the vast majority of the other traders in the market think is going to happen. So everything's explained in the book, A Complete Guide to Volume Price Analysis. There is a version for Forex as well. It's called Forex for Beginners, and both of the books have accompanying examples books, if you like. This was in, I was asked for this a couple of years after the books came out, because they said, yeah, the concepts for the methodology is in the book that you saw in the previous slide, but they wanted to see it actually as worked examples. And it's just a great way to learn, because, as I said, a VPA signal, will appear once, it will appear again, it will appear a third time, and once you begin to recognize these signals, your chart reading just, it's like somebody sent me an email and saying, I think they said, I've been looking at charts, and if you've got blurry eyesight like I have, I need reading glasses, and you're trying to peer at something, and suddenly you put on a pair of reading glasses, and wow, you can actually see what is going on. But what I'm going to do is I'm actually going to show you on the charts themselves. I've got a couple of fantastic examples for you. Last session, or the session before, I can't remember, we were looking at one particular signal, which was the hammer candle, obviously coming at the end of a downtrend, and how that's in one time frame, in a faster time frame, but when you look at a slower time frame, going further up in terms of time, how that then manifests itself within a 2-bar reversal. And I've actually got a lovely example at the other end where we've had a beautiful trend higher in the pound New Zealand. It's a pair that I've been focused on for the last couple of days and been writing about on Facebook. In fact, the pound generally as a currency has been my currency of the month. It's just delivered some amazing trends across the pairs and in all time frames. But we'll come to that in a second. As I said earlier, it's an extraordinary time for markets at the moment. Usually this time of the year, it's kind of the summer doldrums. Markets can be a bit, they can be moving sideways. There's not a lot happening. Well, it's certainly not the case at the moment. What do we have? Just a quick roundup of what we had. Of course, we've had the Federal Reserve. Here he is. God love him, Jay. I certainly don't envy his job and what he has to do at the moment. We had the FOMC yesterday, and essentially, I mean, the headline tells it all. They will do whatever it takes, to keep things going. And as he said, I know it sounds, he's stating the obvious. It all depends on the virus, and certainly on the virus front, things aren't looking terribly encouraging in terms of containment, control, and there's certainly not been any more news on a vaccine. And as he said, hope for the best and a plan for the worst. And I think the downbeat message was really in response to what came through today, and that is obviously we've had advanced GDP that came in. Well, it was forecast at -34. It came in marginally better at -32, but as Bloomberg said, where is not CNN, where is it? There we are. What does it say? Second quarter, it's the worst ever. What did they say here? Neither the Great Depression nor the Great Recession nor any other slump in the past 2 centuries have ever caused such a sharp drain on the economy. And we're also approaching something called there's another strand to this, which is the fiscal cliff. Those of you who in the States will know, I think Congress has got to agree the payments to unemployment, really to keep people keep people going, and I don't think there's been an agreement to that yet. And if things could get any worse, well, if there isn't an agreement, they probably will. And unemployment claims, as I said, they were due to come in at 1,044,000, came in marginally better, but really horrible numbers. Okay, that has gone down, but not by much. And so the whole thing, it's truly depressing for many people. So we've got GDP, we've had unemployment, we've also had the destruction of entire industries. You look at the airlines. I think Boeing reported this year, and just to give you the context for Boeing actually represents 1% of US GDP. The travel industry, leisure industry. The only thing that seems to be holding up is the tech industry. And if we look at the NASDAQ, we can actually see, although it's been moving, it didn't quite make over the 11,000. That was my sort of target. I think it peaked over it and retreated from it. That was a level that I had actually put out and said, look, if it gets beyond 11,000, holds up there, it's going to go higher. It hasn't been able to. We've had up days, down days, up days. First it was a down day, and now it's attempting to go higher. And of course, if that weren't enough, what we have as well today, later on after the news, after the session close, we have we have Facebook. What else do we have? Here we've got Apple, Amazon, Alphabet, and Facebook. They're all reporting today after the close of the market, and which has said it is going to be possibly a crazy day tomorrow on Friday. It's the end of the month, but it's also the beginning of the new trading month, because let's go and have a look on Forex Factory for tomorrow. We have the PMI data coming out from China. They always come out with this data at the beginning of the month, and the beginning of the month is a bit flexible. It could be the last day of the month. So you have this confluence of events going on in the background, and obviously the charts, there's a lot of volatility, there's a lot of manipulation, it goes on and on and on. So there's a lot to take in, a lot to absorb, and whatever you're trading, if you look at the chart, as I said earlier, through the prism of volume price analysis, at least it will take away this feeling that somehow, with all this going on, it's very easy to get the sense that you've got absolutely no control. We don't have a lot of control in our lives, and certainly what is going on at the moment. Trading is deeply, deeply uncertain, but at least with VPA, you can look at a chart and you can think, you see a VPA signal, you have a pretty good idea. Once that signal is validated, you will know what is going to come next. And if you've also invested in our quantum indicators, they will give you an additional level of confidence. So I'm just going to go to the pound New Zealand, because I just want to give you an example of what I am speaking about. And just let me check to see whether it's still actually valid. It's still up on my chart, because this was on a 2-minute chart. Let's have a look. It's just about, you can just about see it. If I shrink this down a little bit, there we are, make this smaller. There we are. Okay. With Forex, those of you who have our indicators and are in and trade Forex, or one of our students will know, we've developed some very specific indicators to help us to find trading opportunities in the 28 pairs. One of them is what we call the currency strength indicator, and how that's represented is basically by individual lines for each individual currency. Now, I've got a version of the currency strength indicator. I've actually taken off all the other currencies. This is actually the pound New Zealand. You see here the pound has been on a real tear on the daily chart. The daily chart's a great example. Some great VPA signals on there as well, which I will refer to in this little segment of the webinar. But I just want to pick out this one in the faster time frames. You'll see the same things across the time frame, but it came up on the 2-minute chart, it was validated on the 5-minute chart, and it was also picked up, as I said, by this CSI. You see the pound rising, the New Zealand was falling. Then we had this potential reversal setting up on the indicator. Well, how did that actually play out on the chart? And this is what we were looking at. We can see here the pair moving higher. A lot of volume going in at this particular time. What we have under here is we have an indicator that we call the tick speed. It fulfills a number of functions. One of them is for traders who like to trade tick charts. It basically calculates the optimum tick value for the chart that you want to be trading. But you can also use it at the bottom of the chart, this really on the faster charts, where it basically picks up activity. It registers in these sort of colors that you see here, whether the activity, the participation level is increasing. And when you then look at the participation level, the volume, and you look at the candle that is being produced as a result of that activity and that volume, and there is a disconnect between the two, you know, something is afoot, as they say in novels. And the candle really that is the suspicious candle, if you like. First of all, look at this candle. You had a nice up candle, a nice load of volume underneath it. We've got green, so we know there's lots of activity going on in the market. Then we have this candle, and you look at it, and you look at the volume underneath it, which is more than the volume of the previous volume bar. But look at the spread. It's very, very narrow, and it's very, very compressed. And you think, well, hold on. If that was, you know, if it took that much volume to move the market that much, what's going on here? So that is a signal. That is the first signal, but this is in one time frame. If you're a trader who maybe just uses one chart, then fine, that would be up to you. That would of itself would be enough to, you know, raise the alarm bells, as it were. But it's when you look at this in multiple time frames that it really, really does produce some amazing results. So that was the 2 minute. I've actually got the 5 minute chart here. And we look at the same piece of price action over those that we saw on the 3 minute chart. So this is the candle higher, and we're still in green with a reasonable amount of volume. And then we have the second candle, because if you were to look at that, you would think, oh, that's great. Well, that looks like it's going high. It's actually hit, and by coincidence, a very, very important level, which is 97.05. In fact, 197 is a key level. VPA is about candles and candle patterns. It's also about support and resistance, but I'll talk about that in a second, in particular with the slower time frames. But any significant level on a slower time frame, so even if you're down here on the 5 minute chart, 197 is an important level. It happens to be on the weekly chart. You would still have to, I would suggest you still make a note of it, because when price reaches these significant levels in the faster time frames, again, something is likely to happen. And what do we get? We had that single candle, which was an anomalous candle in terms of the volume going in and the price action. What that actually translated into was a 2-bar reversal. Last time we looked at 2-bar reversals at the bottom of a trend, and now we're looking at them at the top of a trend. And then what happened was it did actually reverse. The next candle down was actually a volatility candle. It was a very fast move down. We know it's fast and sort of furious. Why? Because the participation level is very high, because the tick speedometer actually tells us. And just to sort of confirm the move that we saw on that chart, in fact, if I just pull it up, the nice thing about Ninja, you've got this data box. So if you just hover over the candles, you've got, that was at 15.55, obviously that was at 15.50. How was that picked up by, as I said, by our specialist indicator? And again, you would use this in multiple time frames as well. I haven't got it up in multiple time frames because I've got all my other pound pairs underneath here. But if we just hover over the indicator as well, and where do we here? Here we are, 15.50, 15.55. It already looked as though certainly the pound was about to reverse, and we have a reversal potential setting up here. So bring all these factors together, beginning with the VPA signal. Then you have all these other confirmatory signals, either from the indicators. And by the way, the level that I was talking about, and I said that was a level which is significant on a very slow time frame. I had an email from someone and said, well, could I possibly, do a book or a PDF or something using VPA with Fibonacci? I don't use Fibonacci. We use Camarilla levels based on the Camarilla protocol. They've actually got 6 levels rather than the 4. And the one thing that I picked up, let's bring over the data box as well, is at this level here. This is the weekly chart, which is the R4, and it is actually at 9.7. It's about one spot 9.7. So I knew, just by virtue of the fact that we were approaching a key level, something was likely to happen, but it was signaled initially by that anomalous candle and volume configuration right down on the 3 minute chart. And the reason I have had to go to the weekly to find a level, if you like, is because the way the indicator works is daily levels are available on all time frames up to, but not including the hour. So if we look at the daily levels, we've already blasted through the R6, and that's quite nice. On the 10-minute chart, we had this bearish engulfing candle here, obviously going up, big candle. Which, if you put one over the other, you've got a shooting star. If we go up to the hourly chart, just got to put some more days in. Hold on a second. Let's move. Again, we'd actually gone through the R6. And in fact, we've actually got a big shooting star on the hourly chart, ton of volume underneath it. That of itself, again, is another signal, another VPA signal. So you see them across the time frames telling you something is likely to happen. Be aware. Then you bring in all the levels, because what the levels will tell you, certainly on the, as I said, on the weekly chart, it was likely to meet some stiff resistance, possibility of a reversal, and putting them all together, using multiple time frames, spotting the signals are there across the time frames. Once you learn to read these VPA signals, you may find you prefer some over others. Maybe you like, especially if you're a reversal trader, you'll be looking for 2-bar reversals. Perhaps in the faster time frames, we're looking at something called tweezer tops and tweezer bottoms. We haven't covered tweezer tops and tweezer bottoms, but we'll do that maybe another time. Those, and you think, yeah, because I like trading reversals. And using them in multiple time frames, if you look at them in the faster time frame, as I said, on the 3-minute, but maybe you like to take your position off on the 5-minute chart, you will see the initial signal on the faster time frame, and you will wait until it ripples through into the time frame of your choice for taking the trade. And it has also, and because there's no right or wrong way, if you're on the 3-minute and you see that, and perhaps you're a more aggressive trader, you think, do you know what, it's so strong, I'm going to take it. Well, that's more of an aggressive approach. If you want to be a bit more conservative, you say, yeah, I've seen that signal, but let me just go and see if it actually sort of plays out in the time frame that I like to take my trade, which could be the 5-minute chart, or whatever combination of time frames that you like to use. It's really very, very much up to you. It has all sorts of implications for stop losses, etc., etc. But we'll talk about stop losses in another session. If you've got any questions, just pop them into the chat box. Happy to answer them either on air, or I'll type the answer in there. Right, David, can I pass over to you now? Is that okay?
Certainly can.
Yeah.